My name is Matt Campione. I'm a partner at the firm of Small & Plevy. My principal area of expertise is federal tax law, and I'm here to discuss various tax issues that you should be aware of. Fundamentally, anybody who wants to have proactive tax planning has to have somebody who understands their tax footprint, which means that there are a range of issues based on your activities, your investments, your family's situation, that results in tax matters that need to be addressed for you. You need to have an expert that fully understands the potential tax issues that address your situation and also address your situation as it changes. So that to me is a very fundamental aspect of any good tax planning, to have somebody who understands how your stuff fits together from a federal tax point of view. Not only federal income tax, it's federal estate, federal gift tax, generation skip planning. All of these really should be matters that somebody understands your situation. The biggest mistake is when people go it alone, when they think in terms of a simplistic approach to a transaction and do not recognize other issues that could be very costly for them. And that ultimately goes to having the right people who represent you and understand your situation. I'm focusing in on the tax issues and also the opportunities to structure transactions that are more tax-friendly, which usually means saving dollars. In a variety of situations, we see patterns, but there are always nuances that are unique to specific individuals. So for example, if you're in a business that requires certain kind of accounting for tax accounting, that's specific to you. Now there's other businesses that the accounting rules may be fairly interchangeable from one business to the next. For example, if you have a business that involves an inventory, there are many methods of inventory that somebody who's expert should be able to advise you on. If you have certain kind of activities in the construction area, there's a whole method of accounting there that you may apply. If you're dealing with holding and owning real estate, there's a whole bunch of rules that may apply to that depending on your circumstances. That's part of my job, to get familiar with your situation, to apply my knowledge related to your situation. In instances where you have certain unique aspects, it's for me to become familiar with those unique situations. And then on an ongoing proactive way, represent you in tax matters. And many times it results in how you structure a deal to get the best results. How do you report something on your tax return? How do you defend yourself if there's an IRS audit or claim? If somebody goes ahead and tells you a whole bunch about a client and you don't have the knowledge base to address all the potential tax issues, you just see a lot less. The way I sometimes like to characterize myself is, the more I know about my client, the more I see, and the more I see is because of what I know from a tax point of view. So substantively, I'd like to think that I could identify 10 things that are going on for that client, and that's part of my job, to be able to apply as optimum as I can my tax knowledge to their circumstances. I always recognize in the back of my mind that I don't present all answers. I worry about the 11th thing that a client may need, and one of the things that I've been fairly intuitive about over the years of doing this is I tend to find the 11th thing based on my inquisitiveness. So in a way of putting it is, I see more things up front, but I'm also intuitive enough to understand when there may be something that I might be missing, and I dig it out. There's a lot out there that can make a lot of transactions and day-to-day activities more tax-friendly. And that includes paying less tax or getting more refund, get lower tax rates, capital gain rate, for example, rather than ordinary income tax rate. That's all part of tax planning. For example, in the area of real estate, there are a lot of transactions that could be done that can eliminate a tax liability or mitigate it. For example, there are things called like-kind exchanges of real property. It's a way where if you continue to invest in real property, you can take the proceeds from one property and roll it into another without having to pay tax on the profit from the first property. We can tell you when you're prepared to buy a business, how do you best structure the purchase to not only make sure you're not inheriting any liabilities of the target entity, but you're getting optimum tax treatment. If you purchase stock in a company, that purchase does nothing to give you any tax deductions or benefits, whereas if you purchase the assets of a company, you can allocate your purchase price among the assets, and as you do business, you'll get tax benefits related to your purchase of those assets to save you tax money, which is important in operating your business. There are ways you can do these things if you understand the rules, where sometimes you're still doing a stock purchase, but it's treated as an asset purchase. And you need to know those rules. We're familiar with them. If somebody is acquiring your business, there are a lot of ways to address the acquisition that mitigate your costs on sale. And there are also ways to structure it so that you may have more buyers. If you sometimes solve the problem, potential problem for the buyer, while having your guy, the seller, get to sell his company without detriment, that's a huge success, because you're making the acquisition more attractive for a buyer. And there's ways through the tax law you can do that. By understanding partnership taxation rules, we can show you how you can combine your business activities or your real estate with somebody else's activities in a totally tax-free fashion, using partnership taxation rules. We need to know a client's situation and when these opportunities come up, so we can make these tax-saving structures part of the transaction. Many times we do not let the tax drive the transaction, but many times we can integrate the tax planning with an acceptable structure of the transaction for other purposes, which is important. You don't deal with tax in a vacuum, you deal with it in the context of what people can do or are willing to do. And we do that. We ultimately all have to live with the tax law as it is, and there are certain instances where there may be little that you can do. But my experience has been that there are a lot of things that you could mitigate the tax problems through working the deal. I'm Matt Campione, a partner at Smolin Plevy, and if you would like me to address your specific tax situation, please contact me at my email is mjcampione@smolinplevy.com. That is mjcampione@smolenplevy.com, or you can call me at 703-790-1900.